Good morning from Lagos. This is your Business Morning, this Thursday, the 6th of September. I am boosting the Mafia. It's nice to have everyone here for today's show. Let's get started. A bit of a highlight of the second quarter trade report that was released late yesterday by the Statistics Office. Let's show you the numbers. The total figure was 6.57 trillion naira for the period ended the month of June. And you can see the summary. The total trade balance was 2.36 trillion. That's a bit of what you had on the surplus side. The imports composition was 2.11 trillion naira, and the exports 4.46 trillion. The headline figure actually declined 8.89%, according to the MBA's data. That was due to a decline in exports and imports under the period, for the period under review. If you flip that, you can see crude oil exports still account for the lion's share of the trade numbers, 3.73 trillion naira. Non-oil export was a very small figure, 218.42 billion. You can see that at the top right side of your TV screen. If you look at the numbers in terms of the percentages, and that's just coming up next for you, if you can see, that's the crude oil trade. Flip that, you can see the percentages there a little bit in terms of what's the change in imports and the change in exports as a negative 4.9 to the right, and to the left, find 6.3% in terms of change in imports. But if you want to look at month-on-month and quarter-on-quarter, that's the next one. Very quickly, 8.89%, more than the last quarter, declined 8.89%, nearly 9%. But over the last 1 year, if you compare second quarter this year with Q2 of 2017, that shows you a positive reading of 14.56%. That's the highlights. If you want to have more, you wait for the news and you get a bit more of that. Of course, it's already online for everyone to see. Let's get on to see the stock market. SARS sentiments, bears bite the stock market. 1.49% yesterday. We thought we were crossing back to 65,000. Yes, no, we fell below that figure. Temple Ashaju is joining us live from our studios at the Nigerian Stock Exchange. Take us through the midweek trading session. Temple, good morning. You have the numbers. Take us through them.
Good morning, boss, and thanks for this. So yes, like you said, we were actually thinking we'll get back to the 35,000 psychological line yesterday, but that didn't work out. Instead, we ended up dropping 1.49% on account of losses in the financial services sector, talking about the insurance and, of course, the banking names, which had seen some good sentiment from investors, local and a bit of offshore in the preceding session. That's where the all-share index came back lower at 34,414.37 after volume dropped by 17%, and of course the value, total value of all that was transacted in the market yesterday fell by 40% compared to the preceding session where we saw a bit of bullish sentiment in the market. The banking sector was down 1.20% and the consumer goods sector was up by 0.25% after we saw a little bit of increase in the bellwethers categorized in that sector. For the industrial sector was down by 2.30% as we continue to see sell-offs and major names in the sector. Dangote is one of them in that sector. For the insurance, we've got losses by 10% over mutual benefits where we saw a bit of sell-offs, profit taking if you like. We also had Law Union and Rock as well as AICO, where investors toward the end of the close of the session yesterday, investors came in to book some profits. Oil and gas was the worst hit as a result of the losses seen on Seplat, which fell by 7.23% down to 603 naira per share eventually. This takes us to the energy markets where we saw less movements in terms of corn oil. It was flat. Forte oil experienced a bit of sentiments yesterday, positive sentiments, where it moved in price by 5.26% back from 19 naira to 20 naira per share. Emirates was flat. O&O was up by 1.92%. As we said earlier, Seplat was down 7.23%. And the major name again that moves there to the negative side of things now to 25 cobbles, Japol, which was down by 3.85%. Over to the unquoted securities market, where that USI, the index there, moved back to 700 mark, up yesterday by 2.56% after investors transacted huge volumes on Afriland, CSCS, and Friesland Wamco Campina on the market side. Their volume came in at 149,021 with a total value of 2.74 million naira. Let's look at the debt side. Bonds and T-bills yesterday experienced some bullish sentiments. We got the bond side of things experiencing demand from local and offshore investors. The mid to long ends of the curve yesterday had some good attraction from investors across board. We saw average yield subsequently contracting by 4 basis points to 15.11%. The major gainers were basically the 2027s and the 2028s, as visible on the screen right now. You've got March 2027 and July 2034. You got 41 deals, yes, at the secondary side of the markets yesterday for a value of 13.2 billion naira. It is expected that this level of sentiments will continue today in the market. But if you go to the treasury bill side of things, yes, still positive, still bullish, with support from the kind of elevated liquidity that we have in the system, although we know that the central bank will begin a kind of aggressive mop-up going forward. But yes, yesterday yields across the curves compressed by 13 basis points to 11.51% on the average. CBN, of course, floated a second open market operations auction recently, and then it expanded its offerings to the 3 maturities. CBN, as I said earlier, is looking to commence a bit of mop-up now in the system. But over just 137 billion naira was sold yesterday, and stop rates was caught at 10%, 11.5%, and of course 12.15% apiece. Bosun.
Temple, thank you very much. The Treasury bills window is something very interesting to watch. We've seen massive sell down or transactions in the Treasury bills mature in September through to the end of the year. Thank you very much, Temple Ashaju, our business correspondent, live to us at our studios at the Nigerian Stock Exchange.